We're about to dive into the rippling waters of the latest U.S. Consumer Confidence Report. Picture this as our surfboard, helping us navigate the turbulent economic seas. So May brought us to a 6-month low in U.S. consumer confidence as Americans' views on the job market started to, let's say, lose some of their sparkle. Yet don't despair. It seems our appetite for those shiny new cars and fancy big-screen TVs hasn't dwindled. The number of households planning to buy these hot-ticket items over the next 6 months has actually gone up, which could be a lifeboat keeping our economic growth afloat this quarter. But hold on, not everyone is feeling as buoyant. There seems to be a cloud over the over 55s and households with incomes between $50,000 to $99,000. With talks of budget cuts and reining in those social safety nets, like Social Security and Medicare, the future may seem a bit gray. Now, let's talk about the labor market, using a simple playground seesaw as an analogy. When it's balanced, jobs are plentiful and life is good. But recently, the seesaw tilted, with fewer people viewing jobs as abundant and more saying jobs are hard to get. The child on the job availability end of the seesaw is rising higher, which is not the fun part of this playground game. In the world of finance, we saw stocks on Wall Street performing a salsa dance, some steps forward, some steps back. Meanwhile, the US dollar took a bit of a tumble against other currencies, and the treasury prices, they rose like a helium balloon at a kid's party. Now, on to inflation. If inflation were a spicy meal, consumers expect it to remain hot over the next 12 months, averaging around 6.1%. This could be a signal to the Federal Reserve, like a waiter walking over with a jug of water to cool things down by raising interest rates again next month. Despite these financial acrobatics, consumer spending remains steady, thanks to solid wage gains. In fact, more consumers are planning to buy motor vehicles and major appliances like our beloved fridge or washing machine. So even with all the economic somersaults, our spending could continue to be the trampoline for economic growth. However, one thing to keep an eye on is the housing market. Imagine it as a game of musical chairs. We have more people wanting to buy houses, but there just aren't enough chairs. I mean, houses for everyone. This shortage could end up driving home prices higher, much like a last-minute bid in an auction. The takeaway from all this? Well, while there are some storm clouds on the horizon with the labor market and housing shortages, it's not all doom and gloom. Consumers are still spending, buoyed by wage gains, and their continued spending could keep the economic boat sailing smoothly for the next quarter. But as always, in the world of economics, it's a good idea to keep your life jackets handy. Stay informed, and remember, knowledge is your best defense against those unpredictable economic waves. Until next time, keep surfing those financial seas.